Something I hear all the time is, I want to buy a house, but I don't know the first thing about getting a loan. Who do I talk to? What do I need? Do I really need to do this before I start looking at houses? All of these questions and more will be answered in this episode coming up. Welcome to another episode of the PRC PG podcast, your go-to source for real estate insights in Central Texas. I'm your host, Eric Coleman, and today we bring you our second installment of the First Time Homebuyers Guide series titled Mortgage Pre-Approval and Loan Options. Now, whether you're looking to buy a cozy condo or a spacious family home, understanding the mortgage process is crucial. So let's dive right in. So the first thing I want to talk about is the importance of mortgage pre-approval. So the significance of mortgage pre-approval for first-time homebuyers is it's fairly important. And the reason it's so important is because by going ahead and getting pre-qualified before you actually go out and start looking at homes, you're not setting yourselves up for disappointment. That's one of the biggest benefits right there. You already know what you qualify for. You know how much money that you're looking to spend, and you won't be doing searches online, and I won't be sending you houses, or your agent won't be sending you houses that are outside of your price point, right? So you don't want to go out there and look at homes that you can't afford or that the bank says they won't lend you money for, because the worst thing ever is to go find the perfect home only to realize that you can't buy it. That's one of the worst things ever. So, I will say that is probably the most important reason for getting the pre-approval. Now, the next biggest reason for getting pre-approved for a loan is, it actually has an impact on whether or not your offer gets accepted. I don't know any agents in the current market, especially over the last few years where the market was crazy, who ever submitted an offer to a listing agent without actually having some sort of pre-qualification or pre-approval letter to send along with that offer. It really makes you stand apart. Now, there's a difference between a pre-qualification letter and pre-approval, and we'll get into that. But just know that you need one or the other in order to be taken serious whenever you're looking at potentially making an offer on a home. Just to kind of give you an example, I had a client who found the perfect home. They were actually pre-approved for their loan. So what that means is they had gone through the entire underwriting process up front. They really dug into their finances and made sure that the bank was going to be happy with giving them money for their house. And so having that pre-approval letter as opposed to the pre-qualification letters that I'm assuming the other buyers had that were going up against this house, I feel that set them apart to the point where they were able to actually be the ones to win that house in a multiple offer situation. So it is important to have, not only for you and your own well-being, your own mental well-being, if you will. It's just so important to have from the seller standpoint, because they want to know that they're going to have the least amount of issues as possible when they go through the selling process. And just to kind of touch on something that we'll get into a little bit later, a seller only has a couple of ways to get out of a contract once they've signed a contract to sell their home. Just a few ways. A buyer has several ways for them to be able to get out of a contract once they've signed a contract to purchase a home. So the seller really has all the risk here. Seller's paying, in most cases, the seller is paying for both the buyer agent and the listing agent's commission. Sometimes they end up footing the bill for, I'd say most of the time, they end up footing the bill for any repairs that need to be made in order to make the buyer happy and want to move forward with the purchase. So these are just all things that kind of roll into, okay, how qualified is this person who's making this offer on my house? And so from a seller standpoint, it really is important. And it's one of the things that I think any agent will tell their clients or potential client and say, hey, listen, if you haven't already talked to a lender, let's go ahead and go do that so that you know what it is that you're walking into and that you have the clout, if you will, to go in and actually purchase this home. So now that we've talked about being pre-qualified, one of the things that you're going to do whenever you're getting these pre-qualification or pre-approval letters is the bank is going to go through and talk to you about the different loan options that you have available to you. Well, I mentioned this in the first episode of this series, but there are different loan products that are the most popular. And those are FHA, VA, USDA, and conventional loans. Okay, now you can always pay cash. If you have cash, then most of this video is not going to apply to you. But if you are like most people and you end up having to finance the purchase of your home, well, then one of these loan products is going to be what you're going to use. Now, first time home buyers, each loan product offers something different. I'll start with VA and USDA. Really, the things that set these products apart in most cases is what their minimum down payment requirements are. Now, there are some credit score limitations that set them apart as well. So that's something that you would need to talk with your lender about to determine whether or not you actually qualify for those different loan products based on your credit score. And that will have some say in which loan product you decide to use. But from an agent standpoint, counseling a potential client, what we normally tell our clients is, hey, listen, as a first-time home buyer, you can, if you qualify for a VA loan, just like a USDA loan, both of those loans require no money down. So if you fall into one of those buckets, great loan products, highly recommend them. As a veteran myself, I've used my VA loan at least 3 times now. So definitely something that you want to look into. However, just because you use one of those loans doesn't mean that you can't put money down on your house. It's just usually the most appealing option to those loans is to not have to bring anything for a down payment. And all you're left with after that is just closing costs. Okay, but going on to the majority of the public, right? Now we're into FHA loans and conventional loans. So we'll start with the most popular amongst first-time home buyers, which happens to be FHA. And the reason that that's the most popular is because it's one of the, between FHA and conventional, it's probably the easiest one to qualify for. And the reason that it is it has a little bit higher debt to income ratios. It has a little bit lower credit score qualification. And usually the interest rates, I don't know that they're better or not, but they are federally backed loans. And so you can actually go online at any point in time and Google what are current interest rates for FHA loans, and it'll tell you. FHA loans, though, for first-time home buyers carry a 3.5% minimum down payment. It doesn't mean you're only going to come up with 3.5% down, but that's the very bare minimum. It's pretty good, especially considering that the majority of people believe that they have to come up with 20% of the home purchase or the home price down in order to purchase a home. You don't have to do that. So 3.5% for FHA. Conventional first-time home buyer, believe it or not, 3%. Most people think it's higher, but it's not. 3% down for first-time home buyer. However, again, conventional loans, a little bit tougher to qualify for. They just have some stricter guidelines. And the reason is because they are not federally backed loans. And so the banks are at a little bit more of a risk when it comes to those loan products. So those are typically your options for first-time home buyers. Now, I've kind of talked about the eligibility requirements, the interest rates. Again, that's going to be variable. So I don't really want to go into too much detail there, especially right now with everything changing as fast as it is. I want to make sure that you understand, though, that the biggest thing you need to be worried about here is, are you qualified as a first-time home buyer or not? And typically that means, have you owned any property within the last 3 years? If you haven't owned anything within the last 3 years, you qualify as a first-time home buyer. And so therefore you would qualify for the 3.5% or the 3% or 0% or whichever ones that they have for you. Incidentally, caveat there, USDA, VA, if you qualify for one of those loans, you don't have to be a first-time home buyer to qualify for the 0% down, just so you know. How do you choose then? Which one do you think fits your situation the best? Well, it depends. So I've already said, as a veteran, I qualify obviously for the VA loan. However, that's not always going to be my best option when it comes to which loan product I use for what it is that I'm trying to do. You have to look at the whole picture. Again, I'm going to say you really need to talk to your lender about this, but making sure that you understand what it is that you're shooting for. Are you going to be in the house for 3 years? Or are you going to be in the house for 30 years? Are you shooting for a 30-year loan? Are you shooting for a 15-year loan? Are you trying to not pay PMI on your loan, or are you? So these are all things that you'll have to think about as far as which loan product you want to go with. Again, they all come with their positives, negatives, and everything that you would, of course, need to discuss with your loan provider. Okay. And any good agent, if you don't have anybody that you really would want to do business with from a lender standpoint, any good agent is going to have at least 3 or more lenders that they will refer you to and say, here, call them all, find out which one you feel comfortable working with. And of course, you don't have to pick any of them. You can go with somebody else. But if you need some place to start, any agent is going to have somebody that they can refer you to. So, what are some challenges that kind of come up with first time home buyers and how do you overcome them? Well, one of the biggest challenges that come up with first time home buyers is credit score. So, a lot of times I will talk to people who say, okay, I don't really know what my credit score is. I know what Credit Karma says. Okay, so just so you know, Credit Karma is a great resource, but as I stated in my last video, it's not the end all be all. It will not give you a FICO score, and FICO is what the lenders are going to pull to qualify you for your home loan. So I would say, well, let's break it down here. You can actually go down to a 580 credit score with regards to FHA, but lenders are allowed to make that a bit more stringent than what what the government says or what FHA says that it has to be. So FHA says we'll lend money to somebody with a credit score as low as 580. Most lending institutions, however, are going to have a little bit higher threshold than that. Okay, some will go all the way down to 580, but the majority of them will not. So knowing that, making sure that you're working on your credit score is probably one of the most important things. Okay, another challenge is having limited savings. You have to have some cash on hand to buy a house. It's just as simple as that. Even if we were able to get you some sort of down payment assistance, or we were able to talk a seller into paying some of the closing costs, those are all things that we can do to help alleviate some of that pressure. But you still have to have a little bit of cash on hand because you're going to have to pay for things like your home appraisal. You're going to have to pay for home inspection, just out of pocket expenses like that that are going to come up. So what are some ways on, how to improve your credit score? Well, if you get connected with a lender, chances are they have some sort of a partnership with a credit repair organization of some sort. Either it's in-house or it's something that they do third party, right? But I would say the majority of people, it really just comes down to, okay, you need to get a good copy of your credit score, which, by the way, once you apply for a home loan and you find out, hey, look, here's my credit score, I do or I don't qualify for a home loan right now, your lender should send you a copy of your credit report. If they do not send you a copy, you have the right to request it and they have to send it to you. If you did not know that, you will get a free copy of your credit report that way. It's important to be looking at that so that you can pay attention to what's on it, make sure nobody's putting anything on there that shouldn't be there. If you have a debt that shouldn't be there, then you have to make sure you challenge that. It's a process, and that's why it's important to have these companies kind of help you work through that process if you're just not familiar. So understanding credit, understanding how it works, making sure that you're doing everything you can do, paying your bills on time, not spending more than you have. What I mean by that is maybe you've got 3 credit cards, and between the 3 credit cards, you've got $50,000 worth of credit that's available to you. Well, the more of that credit you use, the lower your score goes, even if you're making all your payments on time. A good threshold is about 10% of whatever you have on whatever you have available as far as credit goes. About 10% or less is what makes your credit score go higher when you're looking at qualifying for a home loan. Okay, so I know this is not plausible for a lot of people. I'm just giving you some normal guidelines that are out there. So some things to think about. If you can get that down to a 10% or less, perfect. That's going to have a huge impact on your credit score. Again, sometimes it's some of the most obscure things that you could even think about that are going to make your credit score go up, which is why, again, I tell you, talk with a lender, get connected with whoever they use for credit repair, and have them go through it with you and find out, hey, look, if we just take care of this, change this, do this, then your score will be high enough to qualify you for the loan. And that's the whole name of the game right there, is just getting you qualified for that loan. Okay. If that's your goal, you don't have to go through and completely revamp your credit report. You just have to do the things that are going to get your score high enough to qualify for that home loan, get you in the house, close on the house, and then go from there. So What are some local resources and programs available to assist first-time homebuyers in Texas? Well, one of the most prevalent, if you will, is the Texas State Affordable Housing Corporation, or commonly referred to as TSHAC. I know it's weird. It should be TSAC. Maybe some people say it that way. I've always heard it as TSHAC. But what they are most known for is helping you with down payment assistance. Now, if you take advantage of this program, it does come with a bit of a cost, and that cost is in the form of a higher interest rate. Now, how high that interest rate is, that depends based on the current interest rates and the current uptick in what TSHAC is wanting to charge for that. But again, all things that your lender can talk to you about and make sure that A, you qualify for it, and B, you're comfortable with what it comes with. Now, this is essentially free money. If you stay in the house long enough, it's free money. If you don't, it's not free money. And there's more details in that. But again, these are things that I'm going to have you go through your lender to discuss. And also, just as another quick plug, whenever I have my lending colleague come on the show, we will be talking about a lot of these things. So stay tuned. Make sure that you're either subscribed or following so that you can be there and be notified whenever that happens, so that you can get answers to some of these questions, maybe without talking to somebody on your own. Anyways, but that is probably the most prevalent way that people kind of make it through this process. If they've taken care of their credit, they've gotten that up, and now they just need some cash on hand, they still have to have a little bit, but at least they can have that extra assistance to help them get across the finish line when it comes to closing costs and that sort of thing and get into the house. The other way that we can get through this, I mentioned this earlier, is by asking the seller to give what the contract calls seller concessions. So most people refer to it as closing cost money. We can ask the seller, hey, listen, Mr. and Mrs. Seller, could you please give us, $6,000 to help us with closing costs? That's very common, and it does happen quite a bit. And it depends on the market, depends on what type of market that we're in. If we're in a very competitive market, it doesn't happen very often because the sellers hold all the cards. If we're not in a super competitive market, then you start to see those things happen a bit more often, and it can be a very good thing if you find yourself in that situation. Again, these are things that you need to talk to your agent about and find out if it's something that you should be looking at doing. But either way, you want to make sure that it's the best thing to do. And the reason I say that is because let's say you're offering on a $200,000 house, but you need $6,000 in closing costs, or you're asking for it. Well, if you offer $200,000, you offer list price, but then you turn around and you offer $6,000 you ask for $6,000 in closing costs. Essentially, you're only offering $194,000 because you're asking them to give $6,000 of their proceeds to you, right? So you have to think about it that way to make sure that you're not setting yourself up for failure. Again, it is a very common practice. It does happen quite a bit, and it's something that I absolutely recommend to my clients when the situation dictates that that's something that we should do. Again, something you should talk to your agent about. If I happen to be your agent, we will absolutely have that conversation. Now that we have a decent understanding of all of those things, I just want to talk a little bit about some of the key takeaways of this video. This wasn't a very long video, folks, but it's very important that you understand those products that you have available to you, pros and cons, right? Like why would you want it versus why you wouldn't want it. And on that note, let me just say, FHA, VA, USDA, they come with some extra little T's you got to cross, I's you have to dot when it comes to the home purchasing process. Let me talk about that for a second. Because they are federally backed loans, the government wants to make sure that they are making a good investment. So when the appraiser comes out, these appraisers have to be certified to go out and appraise for FHA, VA, USDA loans. It's extra training they have to go through, extra experience that they need. And the reason is because they're looking for certain things. So they are going to be looking for anything that they think would make the house a potential risk to the government, meaning a risk of losing their investment. Well, some of those things are we call them lender required repairs. Okay. Because if they go back to the lender and say, hey, this needs to be fixed before you can give them money, the lender has no choice but to tell you and the seller, hey, this loan cannot close until these things are taken care of. A lot of those things center around what I call the big six. All right. And if you haven't heard me talk about the big six, you've got foundation, roof, HVAC, plumbing, electrical, and wood destroying insects. Okay. Typically termites, but carpenter ants qualify for that too. Any of those things definitely going to fall on that list. The other things that aren't as common, but you do see them, if you have steps up to a porch or steps on the back of your house, is there a handrail? I know it sounds silly, but they will flag these things. If there's paint that is peeling or chipping on the exterior of the house, they are probably going to come back and say it needs to be scraped, repainted before they'll let you close on the loan. Any rotting wood anywhere, well, that's a termite conducive condition. They're definitely going to want that fixed. So just things like that are things that you will have to be aware of when you're searching for your home with your agent if you're using an FHA, VA, or USDA loan. Conventional loans do not carry a risk for the government, therefore they don't care. So the only people that are taking the risk is the bank that you're getting the money from. They do care, but they're getting, the details are just a little bit different for them. And so typically people who use conventional loans are okay with a little bit of a fixer-upper or something like that. Typically you find investors who use conventional loans quite often because you don't have to jump through all those hoops. Generally, I have seen it happen once in my career. That's for another video. But conventional loans, a little easier to get through the process. You can close a conventional loan pretty quick as long as you play your cards right and do everything in a very timely manner. That's really the differences there. So as long as you understand the difference between the loan products, again, what it takes to qualify for them, what being a first-time home buyer means, right? Again, FHA, minimum down payment 3.5%, conventional minimum down payment 3%. And if you are able to qualify for a USDA or a VA loan, 0% down. Okay, it's good stuff. So there you have it, your inside look into mortgage pre-approval, loan options for first-time home buyers. We really, really hope that you found this information valuable as you embark on your home buying journey. And remember, knowledge is power in the real estate market. So stay tuned for more insightful episodes. And don't forget to subscribe to our channel or follow our podcast to never miss an update. See you in the next one.